You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, is traditional investing serving you, or does it just not work anymore? Well, going to hear from a person who was a casualty of the 08-09 financial collapse, but he's back now stronger than ever, running a couple of hedge funds. Name is Robert Napolitano. Robert, it's great to have you on the show. Well, this reminds me of a story. The guy, basically, he's being audited by the IRS, and he's got a write-off. One is, hey, $1 million. The agent says, well, what happened here? And he said, well, we were out on the plane partying, hit some rough weather, crashed, total loss. Oh, okay, that's all right. Got another one here for $1 million for your boat. What happened there? Well, we were out on the boat and we hit some, we ran aground, total loss. Says, oh, so you got another one here. And well, it's kind of a dirty joke, but another $1 million. And what's that for? Well, I divorced my wife. We hit upon bad times after the plane crash, after the boat crash. And guy says, have you learned anything? And basically, if it flies, if it floats or whatever, lease it. So question is here, after your traumatic experiences, and I know it was traumatic during the crash of 08 and 09, have you learned anything?
Have I learned anything? I've learned a ton of stuff. Honestly, I would not be where I am today unless I'd gone through that experience. So they say that, sometimes blessings come in disguise. I didn't know it at the time because of what I went through, but it was a blessing in disguise.
Okay.
It was certainly an eye-opening experience.
And I think you mentioned in the write-up that you had actually gone bankrupt.
That's right. So I'll give you a little bit of my backstory. I'm first generation Italian here in the United States. My parents came, with a high school education. They didn't know how to mentor me and put us through school. They worked hard. My father was a bus driver in Manhattan. My mother cut hair. So we didn't come from, a lot of means. They had to work their way up. They did very well for themselves investing in real estate, worked hard, saved their money, invested in real estate. And I saw that growing up. And so I got into real estate probably about 20 something years ago. I thought I knew what I was doing. I did the courses. You do all the guru courses. Who teaches you how to buy real estate and get your rental income and make sure your cash flow is higher than your expenses and passive cash flow and all that stuff. And yeah, I bought into that. But what they didn't teach you was when a downturn comes, are you prepared? And so I thought I was, top of my game in 2008. I was actually in the mortgage business at that time, writing loans, making money, lending some of my money, top of my game, driving around in my convertible Porsche. I was it, man. And then that crash came and turned out I really sucked at what I was doing. That's what teaches you the lessons, right?
The hard way, hey?
I learned it the hard way. I was robbing Peter to pay Paul, using my credit cards to pay some of my mortgages. Rental income wasn't coming in and I was over my head and I wanted to buy more and buying at the top of the market and didn't know any better. And so, I ended up seeing the writing on the wall that it was coming, but I was in over my head. So I ended up filing for a Chapter 13 bankruptcy. And my mortgage business, my pipeline shot down to nothing. And I said, on the backside of this, there's going to be some real opportunities. And I know there's going to be a lot of lawsuits going on. And I wanted to get involved. So I went to law school to become a paralegal. I wanted to learn how the legal system worked. And so I did. learned about how the law research gets done, how the process works. And I started trying to make some money supporting attorneys who were doing a lot of foreclosure defense. And we were doing foreclosure defense, fighting the bad banks. And so in that experience and everything that I learned going into my own bankruptcy, I ended up challenging a couple of the big banks inside my bankruptcy. And we did so well with that I actually had the banks pay me to go away. They paid my entire bankruptcy estate, paid all of my creditors, paid all of my attorneys, and I actually walked away with a check outside of my bankruptcy. I'm one of the very few people you'll ever see that ever actually walked into a bankruptcy at a certain net worth and came out of it at a higher net worth. And what I had gone through, that took me about 3.5 years. And what I'd gone to, see what the banks are doing to people. I mean, I was called a deadbeat. I was shunned in my neighborhood. You know, people didn't want to talk to me. How could I not be paying my mortgage? How could I fight the banks? How could I be not playing by the rules? And, it took a real toll on me. It really, made me very humble. And at that point, I just got married, trying to rebuild myself as a man, had a baby right after we got married. And I had to learn how to do things the right way, in a structured way. And I never wanted to go back there again. Now that I was responsible for another life, my children, I could not be irresponsible and go back there. And so I learned how to put it back together the right way. And I think there's a lot of misinformation out there about how to do real estate investing in a way where you can actually do well in a downturn and structure your portfolio in a way that these crosswinds that come in the economy will not blow you over. Because I found how these banks do it and how they actually take the risk and actually insure the risk so that even if they do take a loss, they get paid anyway. I found out how they did all that. And I wanted to build it together for my own family. And, I'm out there trying to help people, show them the roadmap, how they can do it for themselves, because I don't believe that our leadership now is looking out for our best interests in everything that we see going on today. Henry Ford had a quote that the highest use of capital is not to make more money, but to make money do more for the betterment of life. And I believe our leaders now are making more money by printing more money for the betterment of their life and not making our lives any better. So I'm at the point where, I think people need to fight for themselves and, set themselves up. And this traditional stuff of traditional investing doesn't work today. It's an old model. People have to look for new ways and, coming through the downturn and profiting off the downturn, I think is a new way that people need to understand how to do this. And so that's what I'm doing today.
All right. So tell us what you're doing now and how it's going for you.
So what I learned going through that experience in dissecting all the mortgages and how the banking system really works down on Wall Street, I learned how they put it together and how they've created a system where they don't lose no matter what.
Heads they win, tails they win. Either way, you lose, right?
Pretty much. That's how they did it. But their system is a great system. The challenge back then was that the players in the system were just abusing the system. So I like the system they put together. They were just cheating it, like they tend to do. So I kind of built this on my own on the private side. And here's what I learned and what I'm doing. I learned that mortgages get bought and sold on the secondary market all day long. It was going on for years and years and years and years and years and years. That's what I learned back then.
They're guaranteed by the U.S. government, by the taxpayers, right?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration transmission system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
And not only that, but then they also insure them as well. So here's how that game worked, right? Here's how that game really worked. You had a banker who said they were going to lend, let's say, $300,000 of somebody else's money to a borrower. And then what they do, they go to an insurance company to insure that transaction. But they wouldn't insure it for the $300,000 in case the banker lost. No, they would insure it for 10 times as much. So they would have an insurance policy on it for $3 million. And they set up the system in a way where their incentives were not aligned. So if a banker lends somebody $300,000 and has an insurance policy to get paid $3 million, then the banker is then incentivized to put a bad loan together, because when they lose that $300,000, they're going to get paid $3 million. They were making profits off of people's losses. And that's how they rigged the system. And so that wasn't fair. But how can we actually make investments and insure our investments? How do we play offense and defense? Well, the first thing we had to do is actually get the actual loans. So we started buying loans. Turns out you can buy these things at a big discount. And it's a great business. You buy these things at a discount, you become the banker, and then you have the ability to keep people in their homes. Or some people like to go and foreclose and get to the property. I don't like doing that. I like keeping people in their homes because I like creating the cash flow, because if I can modify somebody's payment that's affordable and they can start making payments, and they start making payments to me, my company, then that's positive cash flow that I have, and I'm keeping somebody in their home.
How much?
And I become the bank.
How much do you buy a mortgage for on average?
So it depends. So now we go to pricing the risk. It depends on where it is. It depends on if you're buying a first or a second. It depends on the loan to value and how much you're buying it for, and how much it's over leveraged or under, how much the value of the property is. So it depends on a number of different things. But you can buy these things anywhere from, depending on where you are and where the market is. The market rate always changes, but I'll say I've bought stuff from 40 cents on the dollar, and I won't pay anything more than 65 cents on the dollar of debt.
So there are non-performing loans that you're buying strictly.
I'll buy the non-performing loans. I will buy the non-performing loans, yes, because I have, with my skill set and what I've gone through, I have specialized knowledge in how to work these things out. I mean, I was in the loan origination business, so I know how to do the due diligence, what they should be, where the proper, loan to value ratios, debt to income ratios are based on people's income, and where the safe spot is to get these loans modified. So yes, I like doing the modifications through our servicers, and then it creates cash flow.
So you were what we call a loan arranger.
Rearranger. How about that? I'm a loan rearranger. So it ends up becoming a very, very profitable business, because now I have a portfolio of loans that just creates that mailbox money, right? That's what all those real estate gurus out there teach us. You want that mailbox money, that passive income. Well, the best passive income is being the bank, and I don't have to worry about tenants, toilets, people slipping and falling, all the stuff that goes along with real estate and all the liability that goes along with real estate. I just collect payments in my bank account because I'm the bank through my servicer.
So what kind of returns? What kind of returns can we look forward to?
So depending on where we are in the market, I've been doing this for the past 7 years. I'm averaging between 14 and 18% annualized for my investors on a passive basis. These loans, sometimes they take a while to modify, just because how long the process is. And COVID didn't help, because court systems shut down. Some of the servicers, how to deal with moving to remote and setting all that up. So COVID put a damper on how slow the process is. And so depending on where we're moving through the process as well, every state is different. So we have to abide by the state rules. Some states are slower than the others. So on average, between 18 to 24 months, we can turn a deal over. But because we're buying at such a discount, and because the workouts that we're doing, it's a slow process. So it does require patient money, but the returns are definitely there, especially if we're securing it by, the real estate.
Mm-hmm.
But then I went to the next step too. The next step in doing this was, how do we minimize our risk? Because people always want to know what the risk is, right? The whole point of investing is to make more money and not lose it. Well, it was Warren Buffett said, number one is don't lose money. Number two, read rule number one, don't lose your money, right? So we can make money, but there's all sorts of risks out there. So the second thing that I did when I found what the banks were doing with these insurance policies was there was no insurance policy for people like us that are making a living for ourselves. So what I found as I was searching for it was there's what I call the cousin of non-performing notes, which is life settlements, distressed life insurance policies, where people can't afford their life insurance policies anymore, or they just happen to be abandoned because they were corporate policies or because they were used for estate planning. There's a number of life insurance policies that get abandoned and have no more use. So instead of the insurance companies just collecting all the premiums and never paying out a benefit, now we start buying those. We can buy those at a big discount as well. And so by putting the two together, I've now created our self-insurance wrap, as I call it, or as volatility buffer, that any risk that we take on the real estate and banking side can be offset by the life insurance benefits that we are collecting as well. So we can use that as an augmentation for our yield as well. And that's how we put together playing offense and defense simultaneously, because as I said before, I am not going back into bankruptcy and what I went through. I now set it up in a way that, there's no guarantee that I'm not going to screw up. I mean, we all screw things up. So if I screw up again, I at least have set up now the system where I've got cushion, I've got buffer, so that in case, there's something that I haven't looked for, I've got some sort of cushion there and a safety net in there now. So we're playing offense and defense simultaneously now.
Okay. I got it. And it sounds pretty promising and nice returns. Do you have to be a big player in this market, or can individuals invest?
No, I don't want the institutions. My plans are, I'd like individuals. There are minimums that we would like to have invested with us. High net worth are preferred, family offices are preferred, but individuals are definitely. And if people don't qualify to come into our funds, we have other things we can do where we can help them, educate them, advise them on putting their own roadmap and their own game plan together, buying some of the stuff and doing it themselves as well. So we can either do it for you, do it with you, or teach you how to do it yourself. Right. So we've got a little bit of something for everybody. Got
it covered. All right. Well, really fascinating. And I'm glad you saw your way to the other side, because you know what they say, it's always darkest before the light. And
that's the truth.
If you just keep at it, I mean, we've all had our setbacks in life. You out there, you know, it just happens. Life happens, as they say.
Life happens.
And hey, if we're out there and we persevere, we're going to see better times ahead for sure. Rob, I know people out there are going to want to connect with you on the web, whatever. What is the best way to get you?
Easy way we have this set up right now is our new website we're putting up is called capturingtomorrow.com, because that's what we're doing. So you can just email us right now at brilliant@capturingtomorrow.com, because that's what we're trying to get everybody to be, brilliant at capturingtomorrow.com. We want to capture our prosperity today.
Love it. Excellent. Hey, if you got a question for Rob, shoot me an email, kl@kerrylutz.com. Make sure you go to the site, sign up for your free newsletter. Rob, been a pleasure. Good luck. And I hope things keep getting better and better.
Awesome, Terry. Thanks. I appreciate the time. Things are going to do very well for us and everybody else that joins with us. So we're looking forward to it.
All right. Excellent. Thank you so much.
Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.